question is, are they somehow related or maybe it's completely
Hello, everyone. Good morning, good afternoon for where you're watching us. Thank you for being here in the CPDP Latam, Data Protection in Latin America, Democracy, Innovation, and Regulation. This is the panel for the right path to open banking in Latin America. So before we started, I wanted to thank you, all my panelists and my speakers, for being here. Mariana, Mauricio, Rosario, and Jose, thank you very much for being here. So the comments made by Fundación Getulio Vargas, employees and guests during online events and broadcast exclusively represent their opinions and not necessarily FGV's institutional position. We also reiterate that everyone present here has agreed to participate in this event spontaneously and with this authorize the use of their name, voice, and image. In addition to the property copyright scans related to the exposure on this transmission, which will be made available later on FGV's official channels. To continue with this panel and this transmission, we ask you to express yourself verbalizing or signing your agreement. So please, guys, thumbs up or make agreement that you consent for this recording and transmission.
Agree.
Perfect. Thank you so much. So without any further ado, we start a panel. And this is a panel that brings me contrast and feelings because we start talking about open banking in Latin America in a CPDP conference, which is related with data protection. So here we have the best on the line in Latin America to talk about not only open banking, but also data protection regards. So each panel, with each of speakers, we have around 7 to 10 minutes to talk themselves. And then we have like a little bit of leading questions for each of the speakers. So thank you very much, everyone, for being here. And I'm just going to start with my first panelist and my first speakers, which is Mariana Cunha Melo. I'm so sorry if I mispronounced your name. I will appreciate if you start with your presentation. I will put your slides.
No.
Okay. Perfect.
Maria, first of all, I want to thank so much for the kind invitation to be here with all of you, and I'm incredibly happy to share this panel with such qualified speakers. I'm going to give a little bit of introduction about myself, just for everybody's benefit to have a little bit of context. So I am an open banking specialist. I've been working with open banking for the past several years. First at Nubank, where I served as public policy manager as well, and later as strategy and regulation director at Ponto, which is a leading open banking platform here in Brazil. So I'm incredibly happy to be here with all of you. I think we might have the presentation now. Cool. Thank you so much. You can skip to the next slide for us to get started. I'm gonna time my part so that I don't exceed the 10 minutes specified period. Well, I want to start by talking a little bit about the concept and models for open banking. And I don't want to theorize too much about the concept of open banking, but I have found this framework very helpful to guide the discussions about the role of regulation and how to make open banking, what are the trade-offs between each models and how to make open banking really succeed. So we all have an instinctive feeling about what open banking enables, from the famous use cases that we have found already around the globe. For instance, you are able to access the information about the transactions you have in several different banks in only one place. You were able to share your transaction history with a credit provider to get a better deal. You get to start a payment transaction through a third-party provider. All of this is open banking, but I want to take a step back and just state open banking really is this ecosystem created by a legal, technological, and even economical framework that allows participant institutions to access data and services from financial institutions in an automated, programmatic fashion upon user consent or request. I'm gonna go one by one, just make sure that everybody is on the same page. So when I say that open banking is created by a legal and technological framework, I don't mean you necessarily have to have a specific open banking regulation for the ecosystem to evolve. We have, for instance, the United States model, where until very recently you didn't have a specific mandate to make data available for customers upon their request. This changed very recently. A few days ago, Joe Biden signed an executive order mandating banks to open their data. But until very recently, and the whole development of the open banking ecosystem in the United States happened without any regulation of the sort. But you did have this sort of legal basis that allowed private companies, intermediaries, we call them data aggregators, to actually make the connections themselves and enable this ecosystem to be created from a private ecosystem point of view. But you did have this a legal basis that allowed them to do this. And as for the technological framework, depending on the jurisdiction, this can also be very different from depending on your jurisdiction. But you can have a state mandated technological standard that all participants are obliged to implement, or you can have, as you have in the United States as well, this proprietary connections and this proprietary ecosystems that is really enables the information flows to happen, but you don't actually have a standard, a market-wide standard. This is very different from, for instance, in the UK, where you do have a mandate from the state that mandates banks to open their data for customers upon their request, and there is a technological standard they are mandated to implement. But anyway, there are trade-offs between these models. You can have, in the United States, you had the development of this ecosystem without specific regulation, but you do have economic incentives. We had economic incentives there that enabled this market to develop. Whereas, for instance, in the continental Europe, you have the mandate to enable data access, but we haven't so far seen such development of the open banking ecosystem, which kind of indicates that the incentives have not been struck right there to enable this development. So anyway, there are multiple models. I'll speak very briefly how Brazil is dealing with this as well. But the fact is, you always have, in different ways, in different flavors, all of these elements in place when you have open banking development. So the data and services you have access to also varies a lot. In the countries that you have state mandated to open, to enable access to this data and services, specifying which is the scope of the obligation is absolutely crucial for this to happen, because banks participants will only implement what they are specifically mandated to. And the definition of who has to open their data to enable this access also varies a lot. And but generally speaking, it's from financial institutions. Generally speaking, we have access in an automated programmatic fashion, and user consent or request is always very core to the open banking ecosystem, right? We can talk a little bit more about this later, but in my point of view, open banking is all about empowerment, and open banking, and so user request and consent is always very key to this goal. If you can, please move to the next slide, please. Thank you. So the Brazilian model, how does it fit into this whole general framework for open banking regulation? So we had this regulation-driven open banking. So the central bank has been pushing the development of this ecosystem. So we created a general framework, regulatory framework for this to happen with a very broad scope. Includes payment initiation, credit proposals, submissions, insurance investments. So it's more of a open finance kind of a deal. And with very tight deadlines, the second phase for consumer data was supposed to go live today, but central bank postponed to next month. Participation is mandatory for the biggest banks and voluntary for any other regulated institution. It's it's concealed to the regulatory umbrella of the central bank. So any other institution cannot participate in the open banking ecosystem, regulated entities. But they did create this reciprocity rule, which is quite interesting, which is if you're a voluntary participant and you want to access data from other banks, you have to implement the APIs yourself. So you have to give access to have access, which is an interesting instrument for that economic framework of incentives that I mentioned before. The central bank also created this consent flow, the general view of the consent flow, general rules about pricing, but it delegated to the market the definition of specific provisions for the self-regulatory body, as well as the technological standards. So the central bank asked the market to make the heavy lifting of defining specific roles and defining the technological standards, which is also quite interesting because it has the market engaged with open banking, which is quite interesting as well in thinking about that incentives framework thing. If we can please move to the next slide. Now I'm gonna mention real quick, open banking in Brazil has this whole precedence they're very important for the open banking development. It didn't just happen out of nowhere. We had this, the central bank has been showing this concern about standardization and interoperability for quite some time. And it came in very different flavors: in credit portability, payroll account portability, account information portability, even before the open banking regulation, as well as cybersecurity regulation, and several other regulations that were very much focused on increasing competition in the financial system, as well as our general data protection statute, which is also very important for the open banking development because it states data ownership, right? So data is not owned by the banks. The data is owned by its users, right? So it's consumer right to their data and to portability of their data. This is what open banking in Brazil is all about. If you move to the next slide, please. I'm not going to go through all the potential impacts. I'm just gonna mention, I really like this flywheel visualization because it emphasized the fact the open banking impacts come in waves, and we are gonna see the impacts on consumers, catalyzing impacts on the participant institutions, catalyzing impacts on the market, which will catalyze a new wave of impacts on consumers. So this is very systematic approach that I think is very useful for us because it helps to center the whole purpose of open banking in the consumer, right? We'll talk about impact to participants. So it will increase competition. It will enable, it will create opportunities for disruption. It will enable opportunities to compete against big banks and all of this. But this is really all about, it all comes down to the impact on consumers. If you go to the next slide. We have seen this being implemented to increase financial inclusion, both abroad and even in Brazil. So far, even before the open banking regulation went live. So we have several examples of this. If you go to the next slide. And we've been seeing this very interesting development, even in neobanks and big banks in Brazil. We've been feeling this excitement about open banking. If you move to the next slide. But here, where we are right now, right? So we do have several issues that are still to be decided, still to be better aligned on what's the best way forward, right? So with the Brazilian open banking initiative, we have several learnings, and we certainly do not have all the answers. So I selected a few issues that we still have to figure out to discuss open banking in Latam. One of them is the role of regulation and regulators, establishing standards or mandating participation, etc. This comes with trade-offs, and it's not an easy decision to make. In Brazil, we have these discussions about the self-regulation dynamics, because there is a specific rules and for decision-making, etc., that we still might have to make some adjustments to make sure it works well. There are data protection discussions about whether, when we talk about open banking, whether we should be really talking about consent, or we should be talking about requests and more on a more of a portability framework and mindset. And this is a discussion that we've been seeing in India, which is very interesting, the DEPA discussions. Cybersecurity discussions, how to make sure this is all safe, how to allocate liability, how to expand participation either through mandates or through incentives, and how to move beyond banking data on this whole portability issue. So this is the things that I'm gonna my very brief introduction to the issue. I thank you very much, and look forward to the debate.
Thank you so much, Mariana. It was really interesting to see how the owners of the data are the consumers, no? Either way, the competition or the market positions, the user data, the consumer has play a core role in this discussion. So with that regard, I'm just gonna pass to Mauricio. I would like for him to introduce himself a little bit like Mariana did, and then start with the presentation.
Thank you very much for the invitation. As you already told us, a very brief presentation of myself. I am Mauricio Campo, a cyber lawyer dedicated to technological subjects. Our core business is fintech, and I am the founder of Muechi Ocampo, my law firm. And in the other hand, I have a legal hub dedicated precisely for our technological projects, and it's named Technologic. And so this is a little bit of myself and my current position. So very happy to begin with the presentation. Well, so I am ready, right? Okay, thank you. So after the excellent presentation of Mariana, I am only to put some, I think, interesting points over the table. With that, maybe we are going to have very interesting material to talk about, to have your questions. And as Mariana already told us in the last slide, the big deal with open banking, we can put it in these three main subjects. The first one is the security, as Mariana already told us, and as you already know. This is the first important challenge that we have in front when we are talking about open banking, because now the game is a worldwide game. We are going to play with different players of different places, with different languages, and the participants are going to be many of them. So the first one that we are going to take care about it is the security, how the information is going to travel to one point to another. Because if we don't put the enough concentration to attend these security issues, the cybersecurity and all this stuff of all the things that you can make in the cyberspace is an open path to make it the wrong things that we don't want to have it in the open banking. We want to share information. We want to have better services, alternatives. So it is very important. The first one, security, and to have a good security, we have to talk the same language of security. How we are going to vote or to agree to a system that allow all the participants to make this information sharing in a secure way. The second one, as we already talked about it, is the regulation. When you have different participants of different countries, different cities, we have this first issue: which regulation is going to be the one that we're going to follow. We have different regulations, as we already saw with Brazil, and I'm going to talk about the Mexican regulation about it. It has differences. So there is another challenge. How is going to be the regulation for all the participants to be the correct one that is going to make the game for all the participants? So it is very important to be very clear about which regulation is going to be the one that we're going to choose, or we have to create a local regulation and then a worldwide regulation. We are going to see that in a very near future. And the third one, and as you know, always in this type of issues, when security, when data is involved, the weakest part of the change is the user, is the client, because maybe we can have the best platforms and tools to precisely cover all the data protection, to have security, and the best of the best for having the technological things as the perfect point. But if we don't have, or the users, we don't have enough culture, it becomes a zero part, because the user is the one that is the first one and the last one that is going to be part of this chain of security. So if we don't begin with this culture thing, because it's going to be the one that is going to suffer the consequences, maybe all the efforts that we can make in the middle are going to be in a certain way that is not going to let us make this open banking as we can, or as we are projecting to have it in the future, in which all the parts are going to share information, services, and I'm going to open a bank account in other parts of the world with different parts and different characteristics. So it is very important, the culture and how we are going to make the approach with the clients and the users to be very clear that the things cannot be all over out because of this part of the culture and the client or user. Which can be in a very pointed out contributions or opportunities, as Mariana already told us. In one hand, the contributions of open banking, as we already told, we are going to have more and better banking services. We are not only to be the offer is not going to be the local one. I'm going to have an offer, worldwide offer. So this is a very important step that we are taking when we are talking about open banking. And this is very important because including the business plans of the financial entities are changing, because now the user is the center of this stuff that is named open banking. In the past, the ones that were in the center were the financial entities, but now it's the user. The user is going to be in the center of all of this. That is the reason why culture is so important, because if the user is going to be the center of all these efforts, it is very important to have a solid and a good culture of financial culture in the center of all of this. As a consequence, we are going to have a greater coverage and democratization of the financial and banking services. If I have the opportunity to share information all over the world and have different products and services, I'm going to let different players to be part of the financial and banking services. So that is a very good point that is approached with all the open banking service stuff. In the other hand, as Mariana already told you, but this is very important, and you are going to hear, I think, the four of us telling the same about, because this is open banking and that's a protection. So in the middle, there are many concepts about cybersecurity, jurisdiction, regulation. So that are going to be the subjects that are going to be around us in this presentation. And this is part of the opportunities. Cybersecurity, as we already talked about it, the jurisdiction, different players, different regulations. So it is very important to know how we are going to solve this apparently a problem to talk the same language in the jurisdiction and regulation stuff. So sustainability it is very important to know how the different institutions are going to be able to sustain the different technology parts or tools that they are going to create to allow or permit that this open banking sharing information can be done by the standards that we are thinking about. So it's very important to establish that point. And the last one, but not less, the technological differences. As already talked about it, there are many different parties in this open banking stuff in which they have different technological bases. So we have to see which is going to be the road that we have to follow to make it less problematic, all these differences, and have a common base to share this type of information. So what is happening? Open finance in Mexico. In 2010, the law to regulate financial technology institutions, or fintech law, gave Mexico the chance to precisely start and create a very solid base to all fintech stuff, including open banking, and that makes Mexico to like in a certain way have the highlights in this type of regulation, because now we are at the level of Europe, United States, and all these UK, as Mariana already told us, and this make or give us the opportunity to be in that level. And In the subject of open banking, that is a little bit different from UK, from Brazil, and other parts of the world. The open banking is going to be all the rules and obligations all the financial entities have to accomplish with this regulation. And that is a very big difference, because in other parts of the world, as you know, only the banks. That's why in Mexico we are talking about an open finance, because all the entities, all the financial entities are part of this game, not only the banks. So that is another very interesting challenge, because only in Mexico we are talking about more than 2,200 entities. So to make put it in a same group to talk the same language is a very important challenge. In June 2020, the law contemplated all the open banking stuff, but until June 2020, the rules about open banking, how you are going to make all the technological stuff to accomplish with open banking rules, we only have the last year. It was the moment in which the open banking rules make it public. And at this moment, they give the financial entities 1 year to accomplish with all that stuff. And at this moment, it is an obligation to the all financial entities to have the enough technological basis to start making open banking. But at this moment, there is a lack of many works about having ready all the technological stuff to start making all this sharing information. Which are the highlights precisely in these open banking rules for Mexico? There is contemplated a fee for the different financial institutions are going to be able to charge this information they are going to share. They are going to be able to have a fee if you want to have information of financial entities. There is going to be the possibility that the financial institution could charge a fee. At this moment, there is no so clear this subject. We are walking in this road to have it a common basis. And as I already told you, very few ones are accomplished at this moment. Only very quickly, because I am now in the time, I'm going to mention the different levels or types that are managed in the open banking stuff. The first one is the open or public data. And this is all the information that is related to ATMs, branches, product services. This information is public. The ones that we can surf in the internet, we are going to find all this information. But the purpose of this regulation is to have it in one place that is going to be able to share it when it's going to be needed. So the first one, open or public data. The second one, aggregated data. And this is, the relation is with all the statistics information that the different financial institutions have, like average cash withdrawal per month, successful loan application from companies, age and ranges of genders of those who purchase products. All this information that is not public, that is in a second level of sharing and of security, because to enter to this level, you need a special verification. In the first one is public, so it is not needed. In the second one, you need to have a special permit to have this information. And the third one, the transactional data, that is the client or user behavior. And this type of information, you are not going to be able to share it if you don't have the pronunciation very clear of the client or the user of this account, if we are talking about a bank account or a financial account, because this type of information includes balances, movements, deposits, credits, investments, purchases, payments, all these detailed information about the users and the financial client. So this is very important to have it on the table. And as my last comment, this is very important to have it clear that theory and practice, this is a very good moment in which we are talking about the theory, but if we look to the practice, I think there is a lot to be done. As I already told you, few entities have already started with this type of technology. There are different regulations, and it is very important to take into account the third parties that are going to be part of these open banking subjects. The intervention of different parties that are going to be helping to allow these different sharing information. So it is very important how we are going to put these third parties, because we are only focused in the financial entities, but how are going to be the third parties playing in all this stuff. So thank you very much. I will be delighted to hear about your questions and then to hear the next presentation. Thank you.
Thank you, Mauricio. And it's really great that you mentioned all this kind of data that might be or could be shared, because this is like a standardization, like Mariana was saying, like which kind of data we start like sharing around like LATAM, and also if it's according to the data protection framework from each of the countries that are sharing, because I'm a little bit worried about like the targeting, the gender, the discrimination issues that could come with probably automated decision making in the financial sector. No, so that leads to another kind of problems. But not gonna start the debate right now. I'm just gonna give the floor to Rosario. Thank you so much for being here. I will appreciate if you make like a small presentation about yourself, where you work right now, and then if you please share my screen so I can have your presentation ready. Thank you.
That's great. Well, first of all, I really like to thank you for inviting me to share this panel today. We really see this as an opportunity to share the views of the Chilean authorities on this subject, our path to an open finance framework, but also as a great opportunity to learn from the lessons of other countries that are much more advanced in this subject, like Mexico, like Brazil. But also we have been taking the advantage of discussing with the Ministry of Finance, with the team of the Unidad de Regulación Financiera, and that kind of exchanges is always very useful. So my background, I come from the side of financial regulation. I was the vice chairman of the Financial Market Commissions in Chile until recently, and now I'm advising the Ministry of Finance on pushing forward a law that would establish a framework for fintech activities and would also include an open data framework. So very similar to the initiatives that Mauricio explained from Mexico. So definitely not an expert in data protection, and from what I can see in the screen, probably the eldest from this panel. That doesn't happen to me very often. So if you could share my screen, your screen. I have a few slides to keep you entertained. Probably the next one, or maybe two. Okay, two. If you could go back a couple of slides, that would be great. Okay, so as a background context on this discussion, nowadays we see that more than 30 jurisdictions around the world are currently implementing or developing open finance frameworks with different public policy goals. Some countries see this as an enabling condition to further develop the fintech ecosystem. That would probably be the case of UK and other countries. Some see this as a measure to promote further competition in the financial sector. And what we see in many countries is that open banking frameworks have been pushed by competition authorities. And other countries aim to improve financial inclusion. And that's probably the case of many countries in Latin America. And some countries intend to promote all these public policy goals at the same time. In the case of Chile, we have made a coordinated effort among financial authorities here. So this is an issue that's been pushed by financial regulation authorities, not the competition authorities, through an involvement of the Ministry of Finance, the Financial Market Commissions, the central banks. And the idea here is to develop a regulatory agenda to promote competition, innovation, and financial inclusion. Other countries in Latin America have been moving faster than Chile. We need to update our financial regulation to make sure that it promotes and facilitates the adoption of technological and financial innovations, to facilitate the entry of new actors, and to help them to develop new financial products and services that will help to reach especially underserved segments of the population. So in the following weeks, you should see a new bill of law to be submitted to Congress that will propose a regulatory framework for certain fintech activities that will adjust the regulatory framework of current financial institutions to help them also innovate, and a regulatory framework to facilitate the development of an open finance scheme. So in terms of data protection in Chile, the Constitution addresses the issue of data ownership, and also the data protection law, I would say that it enables the development of an open banking framework. It allows citizens, with their consent, to allow third parties to access their data. But as is the case in other countries in Latin America, we believe that it's important to set a particular legislative framework to make sure that we can develop an organized open finance scheme. So this initiative would come as part of a broader agenda of the government, which at the same time is pushing other initiatives like a bill of law to strengthen the data protection framework in Chile that has been in discussions for many years, other initiatives in terms of cybersecurity, digital identity, among others. If you could please move to the next slide. So this is a bit of context, but I guess that Mariana and Mauricio also addressed this issue. But what I want to mention here is that the idea that the financial system is intensive in the use of data is not new, right? So traditionally, one of the main roles that the financial institutions have performed has been to collect and to analyze data consumers from their accounts, from their products, from their services, either to evaluate risk or also to design products. So this is not new. But in the context of digital economy and the digital transformation of financial services, what we see is a trend towards a more intensive use of information and data processing, either to increase operational efficiencies, to reduce costs, but also to design products that are more fitted to the needs of the clients, right? What some people call this data-driven model. And what we see is that data has become like the new oil that lubricates the system, with the difference that you can use data many, many times, right? And this whole process has been definitely accelerated by COVID-19, where we see an acceleration of all the digitalization of financial services. So when we think about an initiative of open finance, what we're thinking here, from the point of view of public policies, is to put the client at the center of the financial system, to recognize that the client is the owner of the data, and as Mariana said, to empower the client. We believe that an open finance scheme could really allow the clients to take control of their financial data, to decide whether they want to authorize new providers or third parties to access the financial information that is currently held by banks and financial institutions, and why? So they can offer them new financial products or allow them to initiate payment transactions with the resources that they keep in their financial accounts. So here, the cornerstone is definitely the client's consent and the possibility of the clients to opt in and opt out of this system. And I guess that we're going to discuss this through the panel, but it becomes really relevant how this consent is managed, right? How to make sure that we have enough safeguards to make sure that this is an explicit consent, that is informed, that is definitely prior to any data processing, that is withdrawable at any time that the client needs to do that, that is limited in finality and duration. So we really believe that an open finance framework should work as an enabling condition to promote further competition and financial inclusion in this market. And our view is that will require a direct involvement of the financial authorities to set and monitor compliance within the participants, but also to establish the standards. And I guess Mauricio mentioned that, to establish the standards and how the exchange information will happen, and or what kind of safeguards we will put in the regulation. If you could move forward, we can skip this one. So there's a slide here on the potential benefits. I believe Mariana also mentioned this, but basically the benefits that they aim to materialize are basically what we have seen happening in different jurisdictions that have implemented this years ago, what we have seen in UK, in Australia, and other countries like in Brazil. I've read recent reports about the amazing impact in terms of payment initiation in Brazil with PIX. That would be something great to achieve in countries like Chile, but also to promote the entry of new competitors with new business models and more customer-centric products to help to reduce the information asymmetry among financial service providers, to incentive greater innovation in traditionally concentrated segments. I guess market concentration is a problem for many countries in Latin America, and also we see very optimistic the impact in terms of SME financing. And to support that, we requested a report to IDV on the fintech ecosystem in Chile, and what we see from the fintechs is that 85% of the fintechs in Chile, when they answer this survey, they say that open finance would positively impact their chances to growth in scale. 56% of those fintechs indicate that they already use open information platforms and APIs, and that they have been moving forward in terms of cybersecurity. But we also asked the financial sector institutions, okay? So we asked the National Commission of Productivity to make a report on adoption of technology. And the point of view of the incumbents here is also that open banking would be beneficial, that it will allow them to open new lines of business, to complement their offer of financial service, to reduce the regulatory costs associated with onboarding or compliance, and to reach more clients and collaboration. So that also makes us very, very optimistic. And we also see that in Chile we do have these barriers of entry, and most of the participants in the market indicate that they would need further access to information on indebtedness, payment behavior. When we discuss about what kind of data they will require, is basically the focus is centered in transaction information. If you could move to the next slide, please, Maria Elena. This is a brief list of open banking use cases that we have seen in other countries, but we are already seeing in Chile. And the reason I want to mention this is because open banking is already a reality, right? Either if we don't have a regulatory framework, this is happening already. We do have comparison platforms, personal finance management platforms, lending marketplaces, alternative credit scoring. So the question is, how is this happening already? And what we see is that clients are willing to give their banking credentials to fintechs that could access the data through screen scraping or other techniques, which we know may pose risk in terms of cybersecurity or data privacy, but clients are willing to do this because they're interested in accessing these kind of services. So in this sense, we believe that an open finance framework could also help to improve security standards and to provide greater stability and less friction to these business models. Almost finishing here. In the next slide, it's important to be aware that an open finance framework or architecture may increase certain risk, okay? So these are not new risks for the financial sector. I guess Jose will agree with me that financial regulation has been addressing issues on operational risk, cybersecurity, and data protection from the financial sector for years. But of course, in an open financial architecture where you have increased flows of data, further dependence on technological providers, and increased interconnectivity, there could be an enhancement of those risks. And here is where we see a relevant role of the regulation to address this issue, to put the right incentives, and to make sure that the participants are willing to address this and mitigate. And finally, because I think I'm taking too much time, in the next slide, we, as I mentioned, we are of the view that it's important not to start everything from scratch. We have a lot to learn, of lessons to learn from other countries here. But we also need to develop a framework that is adequate for the reality of each local financial market, to understand what are the competitive dynamics between the financial institutions, what are the financial inclusion gaps that you want to address, what is the regulatory and institutional framework. And our view is that for a case in like Chile, if you really want to promote competition and financial inclusion, it would be convenient to set a system with a broad scope, probably an open finance framework, not an open banking framework that we have seen in countries addressing other issues. In terms of the scope of participant institution that will need to provide information, the financial products, kind of data, but of course, to be very careful in the design and implementation, consider a gradual and progressive implementation, and we would see a benefit on including in the system transactional accounts, credits, payments, services, investments, and insurance. And for cases like Chile, we also believe that it would be important to incorporate the payment initiation services to create some competition for the card payment schemes, but also to make sure that more people can access electronic payments in a fast way. So that's what I wanted to share with you today, but I'm happy to discuss during the panel. Thank you.
Thank you for so much, Rosario. This is really interesting because what you said regarding what are the risks of this new trend is actually the same risks that we've been approaches for different technologies, no? So this is something that is continue and is a continuancy of those risks. And I will go back on all of you regarding this new legal framework. That means in the current legal framework, there are either loopholes that, like Rosario mentioned, or there are actual barriers in the legal perspective that cannot look forward for the financial open and open banking, as all of you are mentioned. So now I'll give the floor to Jose David Torres. And I let the Colombian speak the last because it's like I'm the Colombian, so it's just to be polite with everyone. But thank you so much, Jose, for being here, and I'm looking forward for listening to your presentation. Go ahead.
Thanks, Maria. Hello to everyone. It's a pleasure to be here and to share some of our views regarding this important subject. It's hard to be the last one, but I want to give you a flavor of how has been our journey in the open banking implementation here in Colombia. We adopted quite a different approach from other countries, but I'm going to let that from a presentation. First of all, I want to introduce myself. I'm an advisor to the Financial Regulation Unit in Colombia. I work with subjects of innovation and financial inclusion. And we've been working for now 7 or 8 months in trying to understand what open banking is and what can we do as regulators. So this is so far what we have found and where we're at. So please, if you could please share my screen. Okay. So first of all, when you try to understand what open banking is, you find some different models in the literature. that are very different from each other. You find on the left side, you have the mandatory approach, and on the right side, you have the voluntary approach. And they differ really much, as you will see. First of all, when you go to literature or when you go to study the Europe case or the case that Brazilian or Mexican case, you're gonna find that open banking looks exactly like this, like the graphic on the left side. You have a third party that has access to consumers' data, transactional data, and that third party uses that data to offer new services to consumers. So in that model, what you're trying to do there is for third parties to enter markets and offer new services. So what you're doing is you're bringing new actors. You're open up the competition in the marketplace for third parties to use that transactional data to offer new financial services. But the thing here is that the issue here is that banks not necessarily have the right incentives to open up their systems and provide these third parties access to financial information. So that's why we're under a mandatory model, because in the countries where this model takes place, it has to be mandated by the regulation. Otherwise, it will be very difficult for the banks to have the right incentives. So under this model, normally the policymakers have these objectives: to increase the competition and to provide customers with new financial services that will help them to use them better and to access the financial system itself. So when you make this model mandatory, there are several concerns from the regulator. Some of the panelists have gone through them. First of all, you will have to think who is going to be obliged to open their data. So, for instance, in Brazil, it's the biggest banks that have to open up their systems. Then you have to think about the scope of information, or the information that these providers have to open up. So the Mexican panelist was talking about the kind of information that you're going to have access. You will also have to think about standards, how the information is going to be shared. And you will have to think about governance, what responsibilities will each actor or each party will have. And you will also have to think about costs. Who's gonna pay for it? Who's gonna pay for the APIs that will make this information available? These are kind of the set of relevant concerns that the regulator has when we're talking about the mandatory model. And in this model, the data protection regime is crucial, because actually the transactional data and the personal information that these third-party providers will have access to are the foundation of the model. Actually, that's why third-party providers are connecting to the system in order to get this information and use this information to provide new services. So this is how open banking looks like in a mandatory model. However, when you go to understand how it has been implemented in other countries, such as Singapore or United States or Hong Kong, you find out that the model looks very different. In this case, when regulators adopt this voluntary approach, what you see is not a third party providing financial services or getting access to financial data for them to provide a service. But what you find is that in this case, in this voluntary approach case, technology is used by banks to offer their products or services on the platforms of digital partners. And that also this technology is being used for digital partners to offer their products on the bank's platforms. But in this case, the bank is the one who still offers the products and services to the consumer. There is no third party that takes away the consumer from the bank to offer new products and services. So that's such a quite difference. And in this model, what you have here is a matter of technology and efficiency. What banks want here is to make their products or to offer the products in third-party platforms so they can innovate in the way they provide their services. And in this model, the concerns are very different for the regulator. As you don't mandate banks to opening up their systems, you don't have to think about what information is out there or who is going to pay for it. But actually, you have to, the concerns are different. So you have to think about what is important in this model. And what is important in this model actually is consumer protection and also the operational risks of digital partners channels on which banks are providing their services. And in this model, data protection regime is not as important as it is in the left one. In this model, as you have seen, third parties do not access this transactional data to offer new services, but banks are the ones who still offer their products and services through digital partners. But those digital partners normally don't have access to the data of bank consumers. So it's different. It's not as important as it is in the left side of the screen. So under this voluntary approach, the advantages or benefits of the system are quite different also from the mandatory approach. So what we want here is for banks and traditional financial institutions to foster innovation, to bring up to the market new products and services that somehow fit the needs of the consumers. And we also have different challenges. So what we want here and the industry want here is to have enough skills and enough talent, enough people and developers who are able to bring up technologies for them to innovate and to digitalize their financial offer. So as you can see here, it's different from the mandatory approach. We don't have here any competition matters. We think more about competitiveness and efficiency. And this is the road that we have traveled so far. On December 2020, we released a white paper in order to kick off conversation. In this paper, we still didn't have clarity about this division of voluntary and mandatory model. So we didn't quite understand the difference between these two models. So we kind of mixed up objectives from one model with the other. But we have been kind of analyzing and understanding better how these models work. We have made a lot of workshops with the industry during March to May 2021. We made a lot of meetings with the stakeholders to understand what were the potential benefits that they saw and how from the regulator we could intervene to foster the implementation of the ecosystem. And we expect to release a new paper with a new proposal, but not necessarily regulatory, but we want to release and to publish all these findings that we have had so far, and to come up with some tools that are going to be proposed from the regulator to facilitate the implementation, but still we're not going to make it mandatory so far. That's the decision that we have made. So our model, I guess that it will look a bit different from how it looks in other countries such as Brazil and Mexico that are here also in the panel. So that's what I had for you, and I'm anxious to participate in the panel and to answer your question. Thank you very much.
Thank you, Jose. That was like super inspiring from all of you to share like the knowledge and how it's been the path in each country. I think it's pretty interesting. So we have pretty much a little bit like 25 minutes for discussing, which is amazing because I've prepared some questions that I wanted to share with you. But first of all, don't forget that on YouTube, you can also put your questions and we will ask the panelists over here. First question that it was shared actually from YouTube, one of the participants, is for all of you because all of you have been mentioned that in the core of this innovation, it's the center, it's the user. Now the user, the client, the consumer. So how to make consumers to see the importance of being empowered. Rosario was mentioned, like it has to be the empowerment of the consumer. So how do we, from each institution or like cultural chip, like Mauricio was mentioning, how we make the consumer believe and change this chip to make the importance of being empowered regarding open data and open banking. So I don't know who wants to go first. So
maybe I can. Okay, Mariana.
No, you go ahead.
Be my guest, please.
So Mauricio, first Mariana, Mauricio, and then Rosario y Jose.
Cool. So this is a really good question, and I believe the key issue about putting users in the center is what it really means, right? It means that consumers can finally use their data and extract value from their data for themselves. Because in a different approach in the previous paradigm, you had all this data stored in their silos, in their the banks that you had a relationship with, and those institutions were able to extract value from your data. And the thing is that the thing about empowerment is the user, the person, the owner of that data is able to extract more value. So it's going to be able to share with whoever is going to enable them to extract value. So it can happen in several ways. So one of them, maybe a first element that we can see that I hope we will see in Brazil soon is mobility, right? So you'll be able to change banks and have more choices about if you're not happy with your bank, you're going to be able to move to another one without having this very huge burden and this cost of switching banks. And the other one is having access to credit. So if we see this different kinds of ways of actually creating value from data to customers, it's very, it has to happen for customers to be willing to share the data with whoever. But if that happens, then I'm really not concerned about how to show clients that the value is there, right? Because it's going to be very apparent that with open banking you can have access to credit at interest rate X versus 2X from previous settings, right?
Thank you, Mauricio.
Yes, as this is very interesting. As Mariana already told us, it's like giving a superpower now to the clients and users, because as we already hear, the is going to be very evident that the users and clients are going to have this possibility. But I think the question is how we are going to make them to have the consciousness that they are going to have this power. Let me only put, I am only, if I don't put it in the table in my brief presentation, I am only studying psychology. And I think the culture, psychology, and technology have a very good relation, because what I want to put it in discussion. We are many persons with social media. We are now in the line of the name, the like culture. Everyone's are putting likes, and everyone is showing their best of their lives. And we are now in the line of the like culture. My life is going to depend in sometimes of the like of the person that is watching me in a social media. So with this, we have to make the reflection if not only as Mariana told us, they are going to be able and they are going to be clear that they have this power, but the person that has this possibility or this power has enough culture and education to know the risks that are involved in this type of information of the sharing your. I maybe I can see that you are going to share inclusively your life behavior, that you are sharing very important information. That's why we are talking about this stuff. So maybe what we can see in this road is not only to sell a service, a product to a client, but also to make the corresponding guide and tell the people and the clients what they are going to be able to do with this stuff, because maybe they are going to have it in their hands, and in one part they are going to be able to know that they can share information and obtain information from other parts. But I don't know if all persons are going to be able to know the importance and the risks, as I already told you. So maybe the mixture between I am going to sell you products and services in the open banking basis, but in the other hand, I'm going to make the corresponding educational programs, the different reunions or meetings that we can have, and so I can share you the importance of this. So I think it's going to be both things that are going to be hand by hand. In one hand, the open banking services and products, and in the other one, the culture and education that is needed to be able and consciousness to be able to have the corresponding data protection and all this stuff managed in a secure way.
Thank you, Mauricio. And I want to ask Rosario if you want something to add to the question, or
yeah, very quickly. I think that we are now in a scenario of increased public awareness of the importance of data. I think cases like Facebook, Amazon, things like that, their data privacy policies have made us all aware, or I hope that we're all increasingly aware of how much of our data is basically there in the space. I think we also have to understand that in either model of open finance, either mandated or facilitated, it may be compulsory for financial institutions, but it will always be optional for consumers. And I think that's very important. So the thing is, how do financial institutions or fintechs or whoever is a third-party provider make sure that they offer an opt-in program that is comfortable for clients? And I think that transparency and the possibility of the customer to control the data is a key issue. So I think that it is up to the financial services sector how they implement this in a way that is responsible, that they are able to maintain the consumer trust. But I definitely agree with what Mauricio said, that any framework like this should be accompanied with financial education programs. And also, I don't know if this is a concept or not, but digital education. Probably, we already seen early adopters, right? As I mentioned, a lot of clients in Chile are willing, especially SMEs, are willing to give their banking credentials or even their credentials to access to the tax authority, because they really see a benefit on the products. But that may not be the case for the whole population. Let's think about elders or people that is less educated. So I think this is an ecosystem that we have to create. So this is a very important topic.
Thank you, Rosario. Also, because what you all mentioned, it's this distinction, no, that Jose was clarifying between the mandatory model and the voluntary one, which has like different approaches from the Data Protection Authority. So I wanted to ask you, I'm completely new, of course, in this topic. I want to know from the experts if in your own country you've been talking to the stakeholder of the Data Protection Authority. So are you being in touch, or the government for the new laws are being in touch with the Data Protection Authority in each country? Because this is like a synergy that I think is missing in so many innovation, structural innovations. So the artificial intelligence, blockchain, everything goes like different, but they do not talk between institutions. And this is something that is being in each of your presentations. And it's like, okay, we have to take the input from different stakeholders. And one of the main stakeholders is the Data Protection Authority. So I want to know your vision about it, and if you have like any example to share with. And I think I'm going to start with Jose, because he didn't talk with the previous question.
Yes, thanks, Maria Elena. Even though data protection regime is not as crucial under the voluntary approach, it is still very important, because there will be business cases that use consumer data. So the answer to your question is yes. We did approach to the competition authority and to the data protection authority to understand better whether the regime is flexible enough, and if it has all the safeguards in place for the model to be implemented. So the answer that they gave is that the Colombian legislation is flexible enough, that is principle based, so it allows the transfer of information between actors in a secure way. So with that said, we were kind of calm, because we kind of understood that angle had been taken care of, and we move forward with other things, other challenges that the voluntary approach had. But I think that just to close up, I think that this interaction between authorities is something that is not new. It's not something that only is relevant for open banking. Actually, all the new technologies we have seen so far with the transformation of the financial industry, there's always needs for coordination with other authorities, because financial entities are always kind of pushing up the financial perimeter. So coordination has become an issue, I think, here in Colombia and in other countries also.
Perfect. Somebody want to share like their experience? Mariana.
Yeah, I can mention real quick. And well, in Brazil, we just only recently created our Data Protection Authority, and I must say I am very curious and very interesting to see how this coordination is going to come about between the central bank and the Data Protection Authority. The data protection and especially this whole notion of data ownership has been very much in the core of what open banking, what the central bank has been doing, and they have been very open about how they they truly believe this is a solid foundation, and our data protection statute is a solid foundation for open banking. But one thing that I'm curious to see how it's going to develop is the fact in the open banking regulation we talk a lot about consent, but one thing that I think it's not quite settled yet is how this consent speaks to the notion of data portability, because when we talk about portability, when we talk about consent, the company wants authorization to do something with your data, to access or to share. And when we talk about data portability, the data owner is the actor, right? He's saying, you are going to share my data with this other institution. And I believe this dynamic is quite different, and I believe this is a very important change in dynamics, because when you're talking about portability, it's not the company's choice, right? It's the user's choice. And when we talk about consent, this is not so strongly put, right? The fact that the company hasn't the power to decide whether they're going to share or use the data or not. And in the data protection statute in Brazil, the Data Protection Authority has this mandate to regulate data portability, which hasn't done so far because, again, this is all very recent. And so I'm curious to know how, whether the Data Protection Authority is going to regulate this umbrella regulation about data portability, and how it's going to impact the open banking regulation, which is, as of right now, based on consent.
Yeah, of course, and this is like the issue between consent versus request. No, it's like how we are gonna do this kind of movement. And just to make like a final question for the one who wanted to share the experience, I wanted to ask you about like this opt-in and opt-out choice that the consumer, the user would have. This model is being painted as a benefit for better services, and all of you said during the presentations that the consumer will have better and more choices. So it's on the choices of the consumer that we will have the power. Yeah. However, we'll see it for so many other kind of products, starting for websites, platforms, e-consumer, starting from consumer platforms in e-commerce, that opt-in hasn't been implemented for data protection in our countries. Like in Latin America, you still need to opt out probably from so many choices. And you don't have the choice to put opt-in. For example, if you're not like, follow me, if you access to like a portal, a platform for buying tickets online, is usually the choices are already clicked in. See? So you need to opt out of those choices. I do want like for you to send me, I don't know, 10 emails per day. So how the financial institutions are approaching this opt-in, opt-out discussion? Rosario, you wanna?
I think we could benefit from the experience of Mariana, which have already seen how is this going on in Brazil, and maybe can step in after that.
Yes, of course. Well, this is a very serious issue as well in Brazil, and especially regarding financial data. We have been a little bit more protective, I think, from a regulatory point of view. We have data secrecy laws that states that it's a crime to share financial data without customer consent, and this has been a very serious issue in Brazil for a very long time. And And we see this being manifesting in several other regulations. For instance, we have this credit score regulation that also states many issues about sharing data for credit protection purposes. Some of the instances also have to be opt-in. We call it cadastro positivo, which is another recent regulation. It already has opt-in embedded. And in the open banking regulation specifically, it's has also been a very important element of the open banking regulation. It always has to be opt-in, right? So it's the logic's not exactly, well, it's kind of the logic of data portability. So you have to initiate the action of sharing the data. So it has to be your choice. It has, you cannot have financial data sharing without the explicit consent, at least in Brazil. And I think this is so far it's a very good approach.
Thank you. I don't know if Mauricio, Jose wants to tell anything. Oh, Rosario?
Yeah, no, I basically wanted to say that I think it's a false dilemma to think that you either go for better services or you go for better data protection. I think it's a responsibility on the design of on the crafting of the regulation, and of course, a responsibility of all the participants to make sure that you obtain the benefits of a framework like this, but you also mitigate the risk. And what we have seen, and we're still in the process of designing in Chile and learning from other experiences, but what we have seen is that there are many countries that they have either introduced new framework legislation on open finance, or they have made amendments to their data privacy regulation. But in any way, basically what they're looking for is to make sure that the consumer consent is meaningful, is well informed, and to basically incentivize the consumers and the participants to adequate the policies, the procedures, the controls to safeguard data protection. So I think this is a very important issue. And you mentioned a few practices that we see today in e-commerce that are probably not well fitted. Things like these long privacy policies that people are never going to be able to learn, or things that do not qualify explicit consent, right? You mentioned these pre-ticked boxes, or what happens, I've seen privacy policies that mention that when you scroll down a website for a certain time, you're basically approving something. Well, the case of, we have reviewed in detail the regulation of the central bank in Brazil, and it's very interesting how they approached this. They didn't wait for the data protection authority to be in place, but they did address this issue. And I think that a regulation, this says, needs to be very clear, and that we're talking about informed consent for a specific purpose, for a certain duration of time, to make sure that this is explained in a clear and plain language to consumers, and also that they can withdraw this. This is a little bit trickier when you're talking about payments, right? Because of the revocability of payments. But I think that the only way to make sure that this actually is not another regulation that the financial sector needs to comply, but it's all actually a tool for consumers to make sure that the consumers uptake this, is that it's in a very trustable framework for them.
Well, thank you so much for the insights. I think I learned a lot. Thank you very much, all of you. Thank you to Jose, to Mariana, to Mauricio, to Rosario for being here, for sharing your experience. This has been really insightful. Don't forget that, I mean, this is the path in Latin America for open banking and open data. This is only like the starting. I think this is going to come to a time that this panel will be in like few years, and just sharing like the experiences of the new regulation, or probably amendments for the previous and the current regulation, is what is happening right now in all of our countries. And I hope you all enjoyed the panel. Thank you very much for this great 1 hour and a half, and I hope to see you tuned in the next panels of CPDP Latam.
Thank you very much.
Thank you. Great discussion.
Thank you. Goodbye.
Bye.